So I'll just ping everyone in the server and then we'll begin our stream. So how's the experience, Ariel? I don't know how to pronounce that, but you said you are catching up with the stream. I hope it's going good. Oh, okay. Bro, you drew on the screen, so kindly remove that. Kindly remove this triangle off the screen. Okay, so it's okay. Confusions, that's not a problem. You can always ask me anything in these streams. Can you please remove this triangle off the screen? Better, Dean. I guess you did it. So kindly. I don't know how to remove that.
Bro, go into your drawing tools. Hello,
Where
that
is that? Is that
no.
in the annotate? I see annotate right there and AI companion.
Yeah, in that undo, can you do undo?
Wait.
You press undo. I think
No.
that person has to do undo.
Yeah, exactly. The person that draw this has to do this. So kindly, bro, remove this. I guess he has no idea.
Is he listening what we are talking? Badin, can you hear us? There is a symbol called this annotation with a pencil mark symbol. If you go to that, there will be undo symbol. If you press that, it will go.
I mean, that's so stupid. Like, why can't the person who started the meeting remove this? I mean, this is kind of
Maybe they have
insane.
the option, but I don't see. Like if I draw here, I can
Wait,
remove.
let me see if I have the right to remove this on internet. Click clear. Okay, let me try that. Okay, I can do that.
Okay.
Okay. All right, so where is the chat button? Okay, here it is. Okay, so today we are gonna learn about, so it's like the last stream of this week. In the next week, we are gonna learn about the market maker models, and in this week, we will learn about top-down analysis, how you go from like the higher time frame chart to the low time frame. So we're gonna learn about that. Okay, so I'll begin like in a minute. Just give me a second. Okay. Yeah, so we are gonna learn top-down analysis, like how we go from like the top, like the high time frame to the lower time frame chart. What do we want to see? And basically, the purpose for, according to me, are how I look into it. Uh, the the reason for doing top-down analysis is to have your drawn liquidity. Okay, so you have to like use 3 time frames. Okay, I'll give you like time frame alignments. Okay, so first I will start with writing up the time frame alignments, and then we can like go into top-down analysis and how we are gonna go from the high time frame to a lower time frame. Okay, so from monthly. Okay, so for example, if price is at a monthly PD array, we are going to look for reaction from that PD array, or from if there is a low or high, we're going to look for reaction from that low or high on the low time frame. So the low time frame of monthly chart is going to be daily chart. Okay, so it's going to be daily. Same for weekly, it's going to be the 4-hour chart. Okay, for daily chart, it's going to be the H1. For H4, it's going to be M15. For H1, it's going to be M5. And for M15, it's going to be M1. Okay, so these are like the time frame alignment. So for example, if you are having like a monthly bias and you expect something on the monthly chart, then you have to go into the daily chart and look for confirmation there. If you expect something, for example, you are expecting a cycle from the external range liquidity to the internal range liquidity on the weekly chart, you need to confirm that on the 4-hour chart. Okay, the same goes for like if you are expecting it on the daily chart, then you have to go into the 1-hour chart and confirm that. And same for all of these time frames. So basically, we are going to use 3 time frames, okay, for our analysis. 3 are sufficient. You can use 4 as well, your choice, but 3 is sufficient. So personally, I use H4. So from H4, where are we going to go? We are going to go into the M15. So H4, M15, and then the third time frame is going to be this. So M15 to M1. Okay, so we go from M15 to M1. So basically, we are looking for like confirmation on all these 3 time frames, basically. Okay, so we expect something on the 4-hour chart. We confirm that with the 15-minute chart, and then we execute on the M1 chart. Okay, so we are not going to focus on executions in this. We are going to talk about that later in this mentorship. But for now, we are just going to talk about the drawn liquidity. Okay, you know how to get a drawn liquidity as of now because you have learned what is order flow. Okay, so you know where to expect, what to expect. You know which direction the market is heading. So order flow literally tells us where the market is heading. Then we have something against the order flow, which is retracement, right? So in a bullish order flow, the market is going to retrace. And in that retracement, market is going to go from external to internal range liquidity. As I've said yesterday, that this cycle is basically that external to internal is basically a retracement. Okay, sometimes it reverses, but if the order flow is bullish, it's most likely gonna go from then internal to external again. Okay, but so basically H4 are, you can use the daily H1 M5, you can use the monthly daily H1. Okay, and you can use the weekly H4 M15. It's totally up to you. It depends on you. If you want to trade on the M1, you want to trade on the M5, doesn't really matter. The strike rate is going to be the same on every time frame. Okay, as price is fractal, and I've showed you a couple of times that how market is literally the same on every single time frame. Okay, so we get a bias on the higher time frame, which let's say I'll take H4 for example. Okay, I'll take H4 as my high time frame. Then I confirm that bias with my M15 chart. Okay, so for example, if there is, I will keep it right here. So for example, if there is bullish order flow on the 4-hour chart and price is already at internal range liquidity, okay, or if it's at like an order block or anything else, now I can expect that the market might run higher. But as I told you yesterday, we just don't blindly go long from here because we think the market is going to go up. What we actually have to do is to go into the lower time frame chart. So I'll draw the lower time frame from this leg, all this leg right here. Okay, so on the M15 chart, it's going to look something like this. Okay, so this is going to be the retracement, and there is the fair value gap. And once price touches that fair value gap, you have to look for a reaction from that chart from the lower time frame. So you know how we confirm a shift in order flow. So here the high time frame order flow is already bullish, but I've told you that in the retracement on a high time frame, the low time frame is going to look like bearish order flow. So you actually have to wait for this time frame to get bullish as well. Now, how do you confirm if it's now going to go with the order flow? So the first indication is a market structure shift with like displacement, which is still less probable, but the second and the most powerful confirmation is a red on a short-term low, and then breakup structure higher. And so simply like the formation up in intermediate term low, okay, our formation up in HR, LR, and then going up. This confirms that this bearish order flow from here to here, or the retracement from the 4-hour chart, is now over, and now the market will continue higher. So in this case, so now have a look. Okay, wait, I messed it up. Then it's gonna go up, okay, expand higher. So now have a look at this. The high time frame chart from where we get a bias. So we already have a bias, right? We know where the market is heading. And now we expect the market to run higher. Then we confirm that with low time frame. Okay. So we go into the low time frame chart and see if that high time frame idea is being supported by the low time frame idea. And we do that with the help of structure. Okay. So when price is going lower, retracing, you will see that the structure is going to be bearish and it's going to go lower. It's going to have a lot of generated liquidity right here as well. Then it's going to reverse. And after it reverses, you can participate on the market structure shift. What you can do is wait for the formation up in intermediate term low like this. And then you can wait for the market to go up and enter from somewhere around here. Now I'll get into entries later, as I've said before. But you use the top-down analysis to actually confirm your bias. You use it to get your drawn liquidity and then confirm that drawn liquidity. So drawn liquidity, you get that from like order flow, but we confirm that with the low time frame. Okay. So now sometimes you will see that the market taps internal range liquidity, but what it does is that it will show a little reaction. It might do like a market structure shift even. Then it starts to go lower again. And then what it does is that it takes out this low right here, a short-term low on the high time frame. Okay, so for example, that short-term low is right here. Okay, so it takes that out. We can still look for opportunities right here. And this is also this can also be a formation up an intermediate term low on the high time frame, right? So we can look for something like this again. And this is way more better. This when price takes out a high time frame low or high, and then there's something on the M15 or like the low time frame like this, something like this. It's more high probable than when price is at internal range liquidity. Okay, but I'm not saying that you shouldn't trade. If you get it, you should trade it. Like it's all about probabilities. Okay, so if you are someone who actually don't want to trade a lot and they just want to have like 1 or 2 trades a week, then that's better to wait for the very high probable setup. But if you are a scalper, then you should just go with it. Like you're a scalper, you know that you want more setups. So if you want more setups, of course the quality is going to be reduced. So quantity is, inversely related to quality. So if you are waiting for quality, then I do recommend you, like if you are not focused on quantity, then I will recommend waiting for this very high probable setup. But if not, it also works. Okay, so if something like this happens on the lower time frame, then and it breaks higher, then you should expect a run to this high back again. Okay, so this is basically top-down analysis. Okay, it's literally this. There's nothing fancy in this top-down analysis. So you either you get a drawn liquidity, okay, then you wait for market to get into internal range or even external. So for example, it can be something like this as well. So price might be here and there might be external range liquidity right here. and now you expect the market to go into this internal range liquidity. So how are you going to confirm that? You're going to confirm that with the lower time frame. So when the lower time frame makes a market structure shift, and then takes out a high or something like that, and like you have to use structure, so that can also confirm that we are going lower. So we go from the higher time frame to the lower time frame. Now you can look for the very same pattern on the M1 chart as well when you are trying to enter. So for example, this model represents, okay, this is low time frame, this chart right here. Okay, so on the higher time frame, you see that price reads a short-term low. Okay, and we might form an intermediate term low right here, and we anticipate, okay, let's say we anticipate that there might be an intermediate term low right here. We go to the M15 chart and there is a market structure shift. Then you can do the same. So now you know that the M15 chart is also going to go higher. So but if you are trying to enter on the M1 chart, what you can do is that, let's say I'll draw this out like this leg. Okay, so there is that liquidity, this one. Okay, so after the manipulation, this is how the M1 chart is going to look like. Okay, there's going to be the breakup structure right here, or the market structure shift, or whatever you want to call that. Okay, then there's going to be a low formed. So wait, let me draw this out. So now you can wait for this M15 low to be taken out. And once that low is taken out, what you can do is that go into the M1 chart and look for the very same pattern again, that intermediate term low, etc. pattern. So wait, I just messed it. Okay, so you wait for like a market structure shift. So you can enter from there, totally your choice, or you can wait for a red on a short-term low, and then you can like target higher. So basically, you are looking for the same pattern on all these 3 time frames. Okay, so this can be right here at the internal range liquidity. So for example, price just went into internal range liquidity. Once that happens, and let's say you are M1 trader, so what you can do is that then wait for a red on M15 low. Okay, and you are bullish. Okay, so then you can go into the M1 chart. Okay, you can go into the M1 chart and look for this pattern right here to appear, like formation up in intermediate term low and market structure shift, etc. Now let's go into the charts and find this out. Okay, so first of all, you get a drawn liquidity. Then you have to you need to confirm that with the low time frame. So let's talk about the Asian model, for example, which I explained yesterday. So for example, yesterday that model appeared. I don't know if it appeared today or not, because I haven't looked at the chart today either. I guess it didn't. On Monday was the cleanest example probably. Okay, so this is the Asian high. This is taken out, right? Now you have a drawn liquidity, and this is the M15 chart. So where are you gonna go now? You are gonna go into the M1 chart. So when you go into the M1 chart, you wait for a market structure shift. Then after a market structure shift happens, okay, you wait for a red on a high. You can enter from the market structure shift as well if you want to. You can wait for formation up in intermediate term high, and you can then, so this confirms this right here, this price action right here. So price takes out Asian high. Now our drawn liquidity is the Asian low, right? So how do we confirm that? We confirm that with the help of structure and with the help of top-down analysis and all the time frame alignment, etc. So we wait for like a market structure shift. Then we wait for like a red on the short-term high. Now this indicates, and it broke lower after the red on short-term high. Now this indicates that the market will go into this Asian low now. Okay, and then you can see that price actually went. Today had a Euro USD buy and GBP sell on the M1. Can you send screenshots we can look into that. Okay, I think that this model appeared on GU because I saw someone on the internet on Twitter posting about it. Let's see if it did appear. Okay, so we have, this is today's price action right here. This is the Asian high. Okay. Okay, I guess it did appear. And this is the Asian low. But in this case, you can see that market took out the Asian low before the 2 a.m. So it's kind of not something I would have looked into. But let's say, okay, just for example, this is Asian high and it is taken out. Okay. Now you go into the lower time frame after this. Okay. Wait, I just closed the chat. Okay, here. Now I'll go into the low time frame chart. So first I'm looking for an marquee structure shift, which happens right here. Now I'm going to look for a red on a short-term high, which I don't see any yet. This is a red on a short-term high and broke lower. Well, this could have resulted in a failed trade. But as I've said, the model wasn't really good, okay, because we already took out the Asian low before that. But let's see how it goes after this. So we have another red on a short-term high and then broke lower. Let's see how it goes. Okay. So it's basically in a consolidation. So not very high probable conditions to trade in. So we'll just let it skip. Okay, so and you sent the screenshot. Wait, I'll start the sharing. Can you see the screenshot? Okay. So Asian high is taken out. There is a marquee structure shift. Okay, first. Then there is a stop hunt. Then price broke lower. So you enter directly on the breakup structure. Had your stop loss right here. And then targeted. I think you targeted 2R. Yes, your markup is absolutely amazing. So good one. So that's like a perfect example. Okay, this is very clean and this is like a very perfect example of what we just start. So you get your drawn liquidity from the higher time frame, from whatever, like for example, you are trading the liquidity pools. So you wait for liquidity, any of the liquidity pool to be taken out, for example, Asian high, then you look to target Asian low. Okay, so
Bro, 1 minute. So 1 minute, I have a doubt.
yeah,
After
sure.
this market structure shift is there now. After this,
Yeah,
there is this. Let's consider this is a short-term high,
yeah,
short-term low, short-term high, short-term low. So this one was taken out, right?
yeah.
So this short-term high was taken out. So can we consider this as an intermediate one?
Now look, as I've said that there are two ways. Okay, so when you are actually trading the intermediate term high and placing your stop loss at an intermediate term high, you either wait for a confirmed intermediate term high. Now, what is a
Okay.
confirmed intermediate term high? It's going to have a short term high to the left and a short term
Okay.
high to the right side of it. Or what you can do is that anticipate the formation of an intermediate term high. So it won't have a short term high to the right side of it, but you just anticipate that this will turn out to be an intermediate term high. So you just place your stop loss, maybe due to your experience with the market or something. But you think that this is going to turn out to be an intermediate term high and we will see a short term high to the right side of it. So you just place your stop loss there. Or what you do is that basically wait for a confirmed intermediate term high, which is here. So there's a short term high to the left and a short term high to the right side of it. And then it breaks lower. So this is a confirmed one. But this is if you try to trade it from here, which I would have, I'll agree, which I would have traded from, and I would have lost as well. So this, I would have just anticipated that there's going to be an intermediate term high. Okay. But
Okay,
losses are just
that's what
like
I
part
was
of it.
thinking.
Yeah.
So, because I thought, am I marking this short-term high very wrong? That's what I thought.
No,
Whether I
that's
am
okay.
marking it wrong or not. So,
No,
but in your charts, you could mark this one, these things and all you mark it as a short-term high, short-term low, because you consider these things in your
yeah.
chart, in your examples you have shown. So I was thinking I wanted to ask this. That's why
Yeah,
that's.
it's okay. So
So if it is confirmed, it is like okay, but we will risk some, some moves. That's why you said we should anticipate, right?
yeah, exactly.
That
So
was your idea.
basically, sometimes you just anticipate stuff based on your past experience. So sometimes you
Okay.
see that price is fractal and everything that happens, they have appeared couple of like hundreds of times before in the market as well. You do believe that if you believe on the algorithmic theory of the market. So everything is fractal and it repeats, okay? It repeats. So basically, you anticipate things based on your past experiences. So maybe sometimes there is like an aggressive move lower, and then you see that after an aggressive move lower, you see the market doesn't go back up to that high which took out the short-term high. So that's why you anticipate stuff. But trust me, this is something that experience is gonna give you. But for now, I'll just recommend you to stick with a confirmed intermediate term high. It's like better. It's better
Okay.
to do that, okay, as a beginner. But you can practice that and try to anticipate things with time. Okay, so yeah,
Okay.
that's what I'll say.
Okay. Thank you.
Now, okay, so I'll go back into my screen. Okay, and show you more examples like from. And once again, in consolidations, these things doesn't work pretty amazingly. So we have to skip consolidations, and we can expect stupid kind of price action in consolidations. So if you identify consolidation, for example, which was right here, okay, and you have seen the price action in this week was literally so stupid. So you should just avoid that. But okay, let's go back into like the top-down analysis thing. Have you ever tried this model on others? No, I haven't. I haven't tried this because the other pairs, okay, the other pairs are like USD, JPY, AUD, USD. Okay, so am I audible?
Bro, you got cut. You got cut.
Is it audible right now?
Right now it's okay. Okay.
Okay.
We didn't hear what you said before.
Okay, so what I was saying that I haven't tried this on other pairs. Now the reason is that the other pairs are basically AUD, USD, NZD, USD, USD JPY, and pairs like these. So you know that JPY pairs are gonna expand in the Asia session. Australian dollar and the New Zealand dollar, they're also like Asian pairs. So they're also gonna expand in Asian session. So they are gonna work like, I haven't tested that out, but it's most likely that they're only gonna work on the GBP and Euro. And the reason is that GBP has like GBP, which is from London, okay? The Euro also has Euro, which is like European, and it's like related to the London session, okay? And then we have USD in this pair, and USD is American. And here we also get this USD, which is also American. So it's not like related to Asia, right? So we can expect consolidation, and you see that there is consolidation almost every single day, like most of the time, right? So there is consolidation, and then we see like a manipulation, like above Asian high or below Asian low, and then we see a run to the opposite side. So that's why I don't think they're gonna work on the other pairs, okay? But I haven't tested it out, so I can't really say anything about that. It's just like what I think about it. Technically, if JPY AUD do the most, and then we could use London as consolidation test, I guess. Yes, most of the time you will see that when when a session expands too much, okay, when a session expands too much, we can then expect the next session to be consolidation. So you might have seen that when sometimes the Asia session is too large, we see a consolidation in the London session. And when the London session is too large, we see consolidation in the NY session. So yeah. Okay, so let's see. Let's go into the top-down analysis. So as I've said, you have to identify order flow, etc. So now, for example, there is internal to external range liquidity. Okay, so price taps the internal range liquidity. Now we are going to go into the 1 hour chart. Okay. Now price already tapped that internal range liquidity, made a market structure shift, but we still see a failure. So that's why I look for like an intermediate term high. Now let's see if we see an intermediate term high formed. Okay, so market structure shift, still no intermediate term high formed. Okay, now we get a market structure shift again. Okay, it's not yet. Okay. Just testing my patience. Now we get it. Okay, now we got the market structure shift, and you can see that there is a red on a short-term high as well, and then we see displacement lower out of that. This can be our intermediate term high, right? There is another intermediate term high right here. Why is that an intermediate term high? Because it has a short-term high to the left and a short-term high to the right side of it, and you see how the market clears out the liquidity. Then I guess there was some news or something like that. Okay, and we get into consolidation once again, but you kind of see how the market went into internal and then external. And how did we confirm that the market is gonna go from internal to external? We confirmed that with the help of structure. We confirmed that when market made a market structure shift, and after that it rated a high and displaced lower. And then it also, so you could have used this one. You can say this one is your intermediate term high, or you can use this one as well. And you can see that after this, the market just runs lower and goes into the external range liquidity. So this is like the whole purpose of the top-down analysis. Okay, so we just like go from the high time frame to a low time frame and confirm things with the help of structure.
Bro, when you are analyzing from higher time frame to low time frame analysis, no, how you take entry in low time frame analysis? Can you show me one? Can you show examples?
Now, entries, as I've said, I haven't explained it yet. So I'll do that later because I haven't explained it. So it won't make any sense for me to explain it right now because you probably won't get it, right? So I'll do that in the next week. No, not in the next week, in the week after the next week. So the next week is, I guess, about what is it? The market maker models. And then the final week is about psychology and entries, etc. So yeah, I'll explain that later with examples of my own trades actually. Okay, so let me talk about how I approach the market and how I usually get my bias. Okay, let's talk about that. When you see me post the detailed reviews, the detailed outlooks on Twitter, how do I do that? Okay, so first of all, I then look at every single time frame for that. Okay, I look at every single time frame. Okay, because my analysis is not for the low time frame. When I post analysis on the Twitter, it's basically for the high time frame. Okay, I do that so because not everyone trades on M1 or M5. Some people love to trade on the H1. Some people trades on the M15. So my analysis contains almost every time frame. So I start from the monthly. Okay, I start from the monthly. And
is it really that our trade become high probable when we trade in the high time frame? Is it
no,
really that?
No, it's not. As I've said, price is fractal. And if you are getting 50% win rate on M1 and you are using the same model, you are going to get 50% on the higher time frame as well. You are going to get the same results on the H1 as well. Okay.
Okay.
So it's not that going from what is it? Going to high time frame is going to increase your win rate. And even ICT himself talked about it. He himself very clearly talked about it. He talked about it in the ICT Market Maker series. Okay, so I was watching that and I heard that he clearly said that. Okay, I don't remember the exact quotation, but it was something that like price is fractal and everything is the same on every single time frame. Okay, so it's not going to increase your strike rate at all. So basically, how I do it, okay, how I do get my bias. So I'll go into the monthly chart and I see how the market is doing on the monthly chart. So we took out liquidity, we got into internal range. Okay, so we are at this bearish fair value gap, or you can see we are at this breaker block. Okay, right? Then what I do is that I go into the weekly chart. Okay, I analyze every single time frame. You might have seen that. Okay, but I don't necessarily use every single time frame for my execution. All I need is H4, M15, M1. That's really simple. I don't go anything above that. The rest is just for extra confluence. You can do that too. But H4, M15, M1 is pretty sufficient. So after that, when price taps into the fair value gap or the breaker block right here, it makes a market structure shift, right? It is clearly displacing lower. The GU chart isn't that clear, but if you go into the Euro chart, you can clearly see how bearish this thing is. And it's literally printing continuous bearish candles on the weekly chart. So that literally suggests that we are very bearish, okay? Then what I do is that mark out the PD arrays on the weekly chart. And when price regresses into that, okay, I go into the 4-hour chart and see how the market reacts from that. So for example, there is this fair value gap right here. Now I'll go into the 4-hour chart and see how the market reacted from that 4-hour that weekly fair value gap. So have a look at this. So price goes into this weekly fair value gap, makes a market structure shift. Okay, after that, there is a red on a short-term high. Then there's a formation up intermediate term. There's a formation up intermediate term high, short-term high to the left, short-term high to the right. Okay, and then it goes lower. Then after that, another retracement. Okay, it also clears out the short-term highs. Okay, and then breaks lower. So that's how I do it. Now, you know what? The best place to trade is when if you are an M1 trader, the best place to trade is when price takes out an M15 low or high. So if price takes out M15 low and you expect bullish prices, you should quickly open the M1 chart and look for that pattern, that HRLR pattern or that intermediate some low pattern. And once that happens, that's going to be really high probable. If you are an M15 trader, so let's say for example, this is a short-term high, right? Price takes this out. So you do believe that this is a short-term high, okay? Price takes this out, okay? Now I'll go into the M15 chart, okay? So I'll go into the M15 chart and make sure that I'm in the kill zones, because it doesn't matter if you are outside the kill zone, nothing really matters. So now I'll see how the M15 chart reacts. So it's kind of not a very good price action by now, okay? Now it trades a high. Let's see how the market reacts from that. It doesn't react well, doesn't go where I anticipated. Now there's another red on the high. Now let's see how the market does after. Now it shows reaction from that. So there's a short-term high which is rated. This is an HRLR. Okay, this can be our possible intermediate term high. Okay, so for example, you can maybe enter right here. Okay, you can enter from this fair value gap or directly from the breakup structure if you anticipate this to be your intermediate term high. Now you can just wait for a formation up and short-term high to the right side of it. Okay, and you can see that how market reacts that, and you will see expansion. Okay, it's literally the same. You will see expansion when there is a red on H4 high or low, and then on the lower time frame, there's going to be expansion. The same goes for on an M15 chart. So for example, have a look right here. There is an M15 chart, right? Then there is a red on that M15 high, okay? So now I'll go into the M1. Oh shit, the data is not available. This is so annoying, to be honest. But
Do you have FX replay, bro? FX replay.
I'll try that. Okay, I'll try that. Okay, so let's maybe go into 1 hour chart. And so if you are like an M5 trader, then you should wait for a red on high on H1 chart. So we have an example right here. So for example, this is an H1 high and it is reded, right? And you expect bearish prices because of all this price action and the previous high time frame order flow. So what you can do is that now go into the M5 chart. Okay, so let's see how the M5 chart is. So this is that red on the short-term high. Okay, now you can see that the market takes out a high, reacts lower. Then, so you can kind of see how the market expands when it takes out an H1 high or an H4 high or low or a daily high. You can see this pattern on any time frame. So have a look right here. So this is a high that is taken out on the daily chart. So where are you going to go from the daily chart? You are going to go into the H1 chart. So now you will see the expansion on the H1 chart. So this is that high. Now look at the H1 chart. Okay. Easy expansions, right? So basically all you have to do is to wait for a red on a short-term high on the high time frame, then go into the low time frame and you will catch expansions. This is literally so like a lot of people don't know about this, and this can give you very stress-free trades. Okay, trust me, this is so amazing. Like it's so amazing to be part of expansions. You know the feelings. You are traders, right? So you know the feelings, how it is to catch expansions while when you get stuck in this kind of price action. So what you can do to avoid this is gonna happen even if the high time frame is bearish. You will still see this kind of price action because there are going to be retracements, right? So in these retracement, the price action is going to be really stupid. So what you can do is that wait for a red on a short-term high, for example, on the H4, and then you can go into the M15 chart and just trade from there, and you will see expansion if the structure get bearish. So you can clearly see how the structure gets bearish. It raises a high, breaks lower, gets into a fair value gap, okay, and then reacts lower. Now this suggests that we are actually in a bearish order flow, right? So prices taking out highs, rejecting lower, prices getting into bearish PD arrays and reacting lower, and then you can kind of see the expansion afterwards. So this was it for like this lesson. Now I have one more example, and that's on the crypto chart. So I'm telling you, these things actually work on every market, okay? But the reason I say that I'm not sure about crypto is that's because I haven't checked it out on like tested it out on like the low time frame, okay? So but on the high time frame, it definitely works, and I have traded it. I have traded BTC in this price action right here, okay? Damn. Okay, these aren't all my trades, by the way. I was just back testing something right here. Okay, so here is red on the short-term low, right, on the high time frame. So from the weekly chart, you go into the 4-hour chart, right? So now I'll go into the 4-hour chart.
But we have to look at the kill zones too, right?
Kill zones. Now, for crypto, I don't
not
really
crypto,
look at
for forex.
Yeah, you have to. You definitely have to.
If we don't get that like a market structure shift in our kill zone, we don't enter, right?
Now, if you are on the low time frame, then you won't enter. But let's say if you are trading on the daily chart, you are trading on the, let's say, H4 chart, then those things
okay.
really doesn't matter. Okay.
Daily zones don't
yeah,
kill zones don't matter.
yeah.
Okay.
So kill zones actually really matter when you are on the low time frame.
Okay.
Because the consolidation, the consolidation in the Asia session, it might look something like this on the low time frame. But if we open
Okay.
a 4-hour candle, it will look something like this.
A single candle.
Yeah, it's gonna look something like this.
Okay.
So it
Okay.
doesn't really matter.
Okay. Now I understand.
Now
Okay.
have a look right here. Okay, so price wears a short-term low, and there isn't even a formation up in intermediate term low here on the 4-hour chart. But have a look at the expansion. Okay, this is like the sauce to catch expansions. You can catch easily like expansion. So rather than participating right here or from this fair value gap or whatever, just wait for a red on a short-term low if you are bullish. And once that happens, just trade from there. Then look right here. This is an H4 low, right? It is rated. Now if I go into this H4 low red on the into the low time frame. So the low time frame up H4 is M15, right? So if I go into that, just see the expansion after that. Okay, rated. So it consolidates, okay, first, but I guess it begins now. Okay, this wasn't probably a best example, but yeah, you can see the expansion after that. Okay, but it still wasn't the really best example, I'll say. So see how it can be easy to catch expansions. Okay, so all you do, okay, just test this out. Just test this out on your charts, and then show me the results. You will definitely be shocked, to be honest. Okay, now for example, have a look at this price action right here. So there is a daily high which is taken out. Now if I go into the 1-hour chart, so daily to 1-hour chart. Now if I go into the 1-hour chart, let's see how it is on the 1-hour chart. It's clearly expanding lower, right? Now this is the weekend price action. This is going to be like this. You can't do anything about that. But when the market opens again on the Monday is also going to be consolidation. But after this, you can see the expansion, right? So you see how easy catching expansion can be. So this is it for this lesson about this top-down analysis, how I approach like the top-down analysis. Okay, you can practice this thing out on your charts. You can go into the live charts and anticipate these things. So like you can wait for an M15, for example, you are expecting bullish prices and you are an M1 trader. Just wait for an M15 low to be taken out. Once that happens, get into the 1-minute chart and look for confirmation there. And you will see the expansion from there. Okay. So yeah. So if you have any queries, you can ask me now.
Okay, bro. Do you have some trades on Asia models?
No, I haven't. So actually, in Asian model, the 2 a.m.
Yeah, 2 a.m. model.
Yeah, I do have, but I haven't traded London that model for a long while because most of them at that time I'm at my university. So I do have examples, but I have to dig deep into my Twitter.
Okay.
So,
Do you journal, right?
Yeah, I do.
Okay. Can you, when you have time, when you're free, can you share it on your Discord? Your models, where you traded Asia model. If it is easy, you can share. If it is hard to find, means no worries, no problem.
I'll try. Currently, I do
Because
have like exams.
if you journal means it will be easy, no? That's why I asked.
Actually,
I will.
my journal is kind of personal. It's like kind of very messy. So so I'll just pick the trades out of it when I get time. Okay.
Like 3 to
and I'll share
4
that.
it will be like it will be easy to
Yeah,
read.
sure. So I'll just find it from there. Okay.
Okay.
So anything else? Yes, by confirmation, I mean in MSS. MSS is still a bit low probable, and the best confirmation is an formation up an intermediate term low or an intermediate term high.
Bro, can you explain this MSS, bro? Market structure shift.
So
To
basically,
identify.
okay, so basically, market is going to create lows and highs when it's bearish, right? But when
Yeah.
price goes above the previous high,
Okay.
this is what a market structure shift is. So this right here, when price goes up before what is it? Above this previous high, that's a market structure shift.
Okay. This one is like very pretty, bro. In chart, it is like a very
Yeah, exactly, and that's why I avoid it.
nothing.
That's why I actually avoid it.
Okay, sometimes what happens is first it takes a market structure shift, then again it goes down. Then
Yeah,
it will go somewhere there and it goes market structure shift again.
yeah.
Then
Sometimes this also happens. Okay, it makes a market structure shift. Where's the
then
high
it goes up.
again?
Yeah.
And there's a market
Same
structure
thing.
shift.
So when
Yeah,
it goes like that, suppose we takes a two market structure shift, then we have to look intermediate, intermediate term high. After that second one, or else
yeah.
do we have to enter in the MSS itself?
No, I don't like to enter on the MSS. Okay, I'll do that only if I'm too certain about price, but I don't recommend doing that. They are less probable. Market structure shifts are less probable. It's like catching reversals. Okay, it's like literally catching reversal. It can just be a red on a short-term low, and this can just expand higher. Who knows? Okay, so just like we saw how the market trades a short-term high and then it expands lower. So people are gonna think that this is a market structure shift and they're gonna go long right here. But what happens? This is what's gonna happen. That's why I avoid market structure shifts and I don't really trade them a lot. Okay.
Okay. So usually 3 time frame is enough, bro.
Yeah, 3 time frames are enough.
Okay. M5, you trade with M4,
H4,
H4 and M15.
M15 and
Then
M1.
okay.
Yeah,
So you open the chart in H4 usually
yeah,
when you see the
exactly.
market, or else you said you will go from daily, weekly, everything, right?
Yeah,
In this
that's just for like my extra confluence. So as I showed you like on the NQ chart back in August when I was trading NQ, I just had that monthly bias, and that monthly bias came from external to internal on the monthly chart. Then I will just go into my chart on like just the 4-hour chart. I will just look at the 4-hour chart. That's literally it. I will just look at the 4-hour chart, go into the M15 and then M1. Really simple.
seems like we have to just tag out with the order flow. Just go with flow.
Yeah, exactly. Just trade with the order flow, and that's what most of the people fail to do. They just try to catch reversals. So you don't know how many people would have shorted all this thing. And when crypto people, to be honest, they are so crazy. When they short, they just don't short it for like small targets. And if they short it from here, they will target something like this. Okay, they're gonna target lows. If they long something, they're gonna long it for the market. This is like the common, like general crypto people. And I've been a crypto trader, and I was like kind of a crypto maxi when I first began trading. So I know how they are, but actually, uh, so let me go into the weekly chart, for example. Okay, I'll open the weekly chart on crypto. I'll hide all these things and I'll show you how many market structure shifts are there. So first of all, red on a low, expands higher. Now so now we have like a clear displacement. This is
That
a
one is
red on a
market structure.
short-term low, right? This is a red on a short-term low, but this actually looks like a market structure shift as well. So if you were here, this would look like a market structure
Oh,
shift,
okay.
right? So they will just go
Okay.
short right here, right? Then
Uh,
market is gonna go up and they will keep shorting all this rally. Yeah, they will keep
oh,
shorting, and not just the crypto people, even the even the euro, the people who trade forex. So I was looking at a report, and in the bearish order, so you know how bearish price was in the last 2 months, and literally the report said that 97% of the traders are long in this market. Can you actually believe that? Like, they were literally catching knives and they were trading against the order flow. Okay, so if you see right here, there is another bearish market structure shift, and
Yeah.
then it goes back up again. Now this also is a bearish market structure shift, but look at what happens after this. Now, not many were bullish right here. Most of the people, like big accounts on the internet, like they were bearish. They were saying that crypto is
So
over and now it's
in
going
the
lower,
order
etc.
flow, it's in a bearish order block, right, bro? We consider this as a order flow, bullish order flow, right? But
So
they
basically,
guys, it's coming from external liquidity to internal, right?
yeah,
So that's why
exactly.
we don't consider this one as a reversal.
Yeah, but so we do have reversals, and sorry, we do have retracements, and in that retracement, sometimes the market is gonna retrace into a PD array, for example, like this. It retraces into the PD array and then goes to the external range. So it goes into internal and then external, but sometimes the market goes lower and takes out a short-term low if it's bullish, and then it expands higher. So then after that, price just after reading this short-term low on the weekly chart, have a look at the displacement after this. Okay, so you can see the difference. So this was
this one
also like a
also
market
external
structure
range,
shift.
internal range liquidity. The low is also internal range liquidity, right?
This low right here,
Yeah, that's what it's targeting, right? From external range
no,
liquidity.
this isn't really internal. So this can be internal on a very high time frame. Okay, so basically internal is just like
Okay.
a fair value gap. Okay, but
Okay.
this can be, if we maybe, I don't know how the time frame alignment is gonna work right here, but maybe if we go into the 2-month chart or 3-month chart, we might see that this will be like a fair value gap. This will be a fair value gap low, and there will be a fair value gap high somewhere around here. So liquidity, like lows and highs on the low time frame, are actually fair value gaps on the high time frame. Okay, so that's what I understand about it, and that's how it
So it's
actually
just
is.
a ride on this liquidity. So they came here for riding this lows for getting some liquidity, and they went up.
Yeah, so basically when they are going up consecutively, so even you would have seen the sentiment on the Twitter. So when price was going higher, everyone was calling for a bull market, and they were saying that the crypto is back and now it's going to go to highs, etc., etc. Now, even though the market makers were bullish and they were wanting to go they were expecting
The
like
price
higher
up.
price, and they wanted to pump the market, but what they did is to first get people into fear, take out the people who are already long and they are not, and people who bought right here and had their stop losses right here. So it came lower, took all those people out, and see, look at this candle. This scared a lot of people on the internet. I saw that. Okay, this scared a lot of people, and once this happened, everyone was literally calling for bearish prices. This is what ICT refers to as chasing candles. So they see a black candle or bearish candle, they gets bearish. They see a bullish candle, they gets bullish. That's how they literally, they don't have a logic. Okay, they don't understand where the market is gonna go. They just chase candles. So when this candle appeared, everyone was literally so bearish. Okay, but I knew that it's gonna go higher because the order flow is clearly bullish, and we have no signs of reversal by now. So if there was any signs of reversals, then I would have suggested that yeah, it might now come lower again. Okay, and go into
Signs of
these
reversal,
lows.
how we
It's with structure. So if there was formation up an intermediate term high right here after the market structure shift, I would have said that now the weekly chart is getting bearish, but we don't have anything like that, right? We look at this. There's no sign right here. There's no formation up an intermediate term high yet. Okay.
Yes.
Can you see an intermediate term high? No, definitely no. So why should I try to catch reversals and go against the order flow? It doesn't make any
We didn't
sense.
get the market structure shift itself, bro, in this, right?
This can be called as a market structure shift because it's a high, it goes
No,
lower.
bro. Like low, right? You're talking about bearish, no?
What do you mean? Can you like
Like
annotate it?
we were talking about like a reversal, no? From this is actually bullish, but
Yeah,
we are talking about the bearish, no? It didn't market structure shift minds.
yeah.
So once it shift only, we will look for intermediate term low on everything, right?
Yeah, exactly. But this itself is an intermediate term low on the weekly chart. Why? Because have a look. Short-term low to the left, intermediate term
Okay.
low, and a short-term low to the right side of it.
So it gives us bias to go up, right?
Yeah, exactly. So now, any questions? Anyone have any questions? You can take a screenshot of this, okay, and save it with yourself.
Bro, once go to that Bitcoin chart.
All right.
Wanted to ask.
Thank you, Andrew, for the appreciation. Okay, here's Bitcoin.
So this one is this one low, this one high, this one low, this one high, right?
Yeah.
So it got this one got traded, no?
Bro,
This
if you can like
sorry.
communicate with me in Hindi, that's okay.
No, I don't know Hindi, bro. Okay,
Well,
this one got traded, right? This high, this short-term high got traded by this, right?
yeah.
So I'm asking, we are talking about the bearish, no? This is this giving us a sign for a bearish trend? That's what I'm asking.
No, it's not. Why? Because first of all, we have a bullish order flow on the high time frame, right? So we are bullish. The monthly chart is also respecting the PD arrays and going higher. Okay, then this right here, it's just a red on a short-term low. Okay, and have a look at the reaction after this low is rated. Then the market goes up, comes back down again, gets into some insane kind of consolidation. With the cryptos, they do this thing. Okay, it gets into consolidations a lot. Then we have a high right here, right? So this can be our market structure shift, okay, like a structure breakup structure after a red on short-term low. So you can see the pattern right here. So first it was retracing.
Okay.
Then
Okay.
it makes a high, and then that high is breached, and then the market goes up. So this can be, so when we are bullish, we are just looking for bullish signs,
Bullish
and we
signs,
just
okay.
only withdraw from our bias if we see the structure opposing that bias. So if you see there is no clear intermediate term high formed in this price action, so I would have only get bearish if we had something like this. Okay, so there was a high made, right? So if price did this and something like this, then I would have definitely said that now we are aiming lower for this lows and these equal lows. Then I would have said that, but there was nothing like that, and it was pretty much okay. So if you look at this chart, does it look bearish by any means? It's trending up.
No.
Okay, so if you just expect higher prices when the market is going higher, and you confirm that with the structure, and the structure is also bullish, and you expect lower prices when the market is bearish. For example, like this. Now we can see example of it on the Euro USD clearly. This is how a bearish chart looks like. There is no upward momentum. This is getting into PD arrays and coming lower. Now, if I go into even a daily chart, okay, you will see that how bearish this chart actually is, and like it's having like a bearish order flow. Okay. This trading view is just crazy, to be honest.
Something you got a cut, bro, recently.
I don't know, something is wrong. Okay, so I hope it's fine now.
Okay.
Yeah.
Now we can.
Okay,
Yeah.
so you can see that there is clear bearish price action in this. So it's not a wise thing to expect higher prices when we are here, even though there will be people who will think that this is a market structure shift. They will buy it and they will expect higher prices. But all they do is that they don't have knowledge about the order flow, etc. And they just chase candles. So market structure shifts without order flow are basically useless. Okay, and you see when you understand order flow. So when this mentorship was starting, you know, I was clearly bearish, right? Why? Because the order flow was bearish. Like there was nothing special in that. Okay, it's all about order flow. So and I did tell you that every retracement that we get from to the upside is just gonna be is just not gonna last longer, and it's then gonna expand lower, and you can kind of see the
There is
expansion
some
lower now.
problem, bro. I
Wait,
think.
hold on, give me a second. Hi, can you hear me?
Hey, bro. Yeah.
Okay, so I actually got my cable. There's a problem with my internet cable that was making the whole issue. Okay, I'm sorry about that. Wait, okay, I'll get back into the screen. Okay, so basically, I was talking about how you need to understand order flow. And when this mentorship started, we were, I guess, I don't know where we were. Okay, so we were somewhere around here, right? We started on 22nd. So I was clear about that this is just a retracement, right? Why? Because all this, the previous price action was bearish. We were in a bearish order flow. So we just literally, all we have to do is to trade with the order flow. Now there are going to be retracements. So what we can do is that wait for those retracements to be over. And those retracements are actually some low probable condition. We see low probable conditions on those retracements. Now you can see right here, price was in a retracement, it retraced, and now you can see that how it is expanding lower once again. So there is a high, right? Where's the marker? Okay, so a short-term high, intermediate term high, and a short-term high. We have formed the intermediate term high on the daily chart right here as well. Now we can just expect lower prices. Okay, we can expect this low to be taken, gets all taken. We can expect this low to be taken, and we can expect this low to be taken out. Okay, so it's literally all about order flow. Then after order flow, you use structure. Okay, there is actually gonna be a class in which I will talk about uh how do you start from, what are the things that you need for a complete model. Okay, so I will get into that. Okay, there is a separate lesson for that, how to use everything we have learned so far for our advantage. Okay, so don't worry, there is a class for that. Okay, but for now we were just talking about top-down analysis, and I guess we talked a lot about other stuff as well. So let me know if you have any questions. We can talk about it.
Okay, bro. How we confirm our trading edge, bro? Only with the demo trading, huh? After
Yeah,
confirming
yeah,
like 6 months
yeah. You can
of
do
demo
that
trading, we can be
with
sure. Okay.
demo trading. After demo trading, when you are confident, just like do a small deposit, for example, like $50 to $100, okay, and
Okay.
risk small, like on exchange, get on Prime XBT exchange or like get on any other broker and invest a small amount, like deposit a small amount and risk like $5 a trade, $10 a trade, okay. Just risk this small amount on your trades, and in that way, it will let you know what are the problems that if you are facing problems related to your control on emotions, etc. or not, or if you can be profitable with higher capital or not, okay. So after demo trading, you can do that, and if you pass that, you can either look for a prop firm, okay. You can deposit your own capital and trade there.
Okay. How we are saying like through demo trade only we will know this probability, na? Hedge,
With
hedge.
demo trading, the problem with demo trading is that you are losing nothing from your real life,
Okay.
okay. So
Okay.
you don't really know how you are gonna deal with losses, how you are gonna deal when you face a streak of losses, okay. There are gonna be losing streaks, and it's normal. Every traders have this. So you will not know how it feels like to lose real money, okay. And that will kind of
Okay.
give you
Okay.
unrealistic results on the demo trading. And then when you go into the real account, okay, your expectations will be maybe 10% a month, and you will be maybe losing because you won't have control over yourself. You cannot handle losses or anything like that, okay. So that's why just demo trading isn't enough to prove your edge.
Okay. How long you been trading, bro? ICT?
ICT, it's been like 10 to 11 months now.
Before that?
Before that, I traded for I guess 4 to 5 months.
Okay. Like how you trade? I'm asking. Support and resistance.
Yeah, I would do
Supply
it.
demand.
Patterns. I used to trade patterns.
Okay. Breaking high,
Yeah,
low, like that.
yeah.
After that, you came to ICT.
Yeah.
Okay. Why you came to ICT, bro?
Why I came into ICT?
Yeah, like a
Uh,
reason. Because
okay,
I
so
thought I was learning this support and resistance.
okay, so
Sometimes
actually,
I feel like I don't know where the market goes. But after seeing one guy video of ICT, I know exactly this guy is telling this is going to the air. And he is
yeah.
like
So
explaining to me
actually,
exactly.
my friend actually made me watch it. So he said I found out videos of ICT, and he said that this guy is crazy and he has some insane kind of knowledge and something like that. And I got excited about that. So he was my college friend. So I
Okay.
just he was also a trader. He was also trading RSIs, etc. But he found out ICT, and he told me that this guy is kind of crazy and he has some secret knowledge and whatnot. So I got into ICT and I started learning it. And when I was learning it, I felt like this guy is insane and he probably knows a lot. Okay.
Where you started, bro, in ICT?
When?
Like which one you started first?
Okay, so first,
There are so much playlists.
my friend sent me the link of the 2022 mentorship. But when I went
Okay.
into his channel, so I just do this thing. I do my own research, of course, always. Okay, I do my own research. So I got into his channel and saw a lot of playlists there. So there were like a lot of playlists. Like there were the core content 2016. So I said, why not start from the very basics of ICT? So I directly started learning the core content. and I learned it till like core content month 4. And in core content month 4, the PD arrays, etc., were explained, and there were a lot of stuff in on those 4 months of content. Then he told me that ICT said that you don't really need the core content. Okay, you can be profitable with the 2022 mentorship. So I started watching the 2022 mentorship, and when I was done with that, then I started learning. I got a bit deep into the core content again, and I started learning the core content month 5, in which the IPTA data ranges were explained. I learned a few lessons from the month 10, and a few from like 11 and 12. So I didn't really watch all the content, but a few of the videos.
Okay. Okay.
Yeah.
IBDA means this inter. What's that? Interbank
Interbank
delivery.
price delivery
Price
algorithm.
delivery. Okay. How do you frame this model, bro? What you're using?
This model, okay, so this model had like I learned it from a couple of guys on the Twitter. The order flow thing, I learned it from Romeo. Wait, I'll drink water. So I actually learned order flow from Romeo. Okay, so he's a guy on Twitter. So I learned it from him in his videos, in one of his YouTube videos. Then I came across the market maker, the MMXM trader. Okay, he's a guy on Twitter. I came across his account when I studied his Twitter account, I found out something unique, and it was the simplicity. So the other guys on the internet, they were really making the ICT concepts really complex. But when I checked his account, okay, when I checked his trades were literally so simple. Okay, so I just started studying his Twitter account, and when I studied it and I saw how he trades and how he uses the PD arrays and how he enters, etc., I started trading his way. And that's where I like learned most of. Then I watched his course as well, which was definitely worth it. Okay.
I
So
saw his post.
yeah, so
In this, he explains this in external liquidity to internal liquidity and all.
yeah, I learned
video.
that from him, to be honest.
He explains. I think some of the things he explains very basic.
Yeah,
Like even we can understand, like without seeing ICT also.
yeah.
Some.
But
I remember something. I think market structure shift or something. He was explaining very clearly. Like he didn't have to explain it, but
yeah.
he explained it.
So, I was trading like the internal to external range liquidity, external to internal, basically, even before the course came out. And that was just by study. I didn't knew the terminologies though, but I learned it from his trade. So I saw one of his trade on the Twitter, and it's still there on my account. It's in the highlight section. Those were some of my favorite trades. Okay, when I learned his way of trading and I started trading his way, I was really shocked because he was very simple. So I saw one of his trade. Okay, it takes out a high on the daily chart, and then he like marks out a fair value gap and puts an I sign there, which meant that from which I concluded that when price takes out a high, when price
He
takes
will
out a
tell you
high,
that where your eyes should go.
yeah.
Like
So
that he will tell you.
exactly. So when it took out a high, I concluded that when market takes out a high, our next target should be the fair value gap. So I started doing that. Okay. Then I learned more about it when he released his course. Okay. So I got
His
to
videos are very good, bro.
yeah, when he
But I didn't know basics, so that's why I thought you thought very basic. I learned so much from you.
yeah.
Like I think after doing your models, like after doing studying of your models, I will go back to his videos. I just binge watch his videos. when I get bored.
Yeah,
Is at the end of the final end post, he has a Asian gem model or something. Is that
yeah.
model? Have you tried that? Is that model we were talking about? The
No,
Asian model?
I
It's
haven't
different.
I haven't traded that. I haven't tested that out. The reason is that the Asian session starts at 5 a.m. in the morning in my local time, so I can't
Yeah,
really. I sleep at 3 a.m. or something like that, so I can't really wake up at 5 a.m. to just to trade.
MMX. Next week we're doing that post, right? MMX.
Yeah, we are doing market maker models.
Okay. These trades are very simple, I think, bro.
Yeah, exactly. I like that
Can you do
simplicity.
tweet any trades of him? Can you do review like that? Can you see
Yeah, sure, I can do that.
MMX.
Um, Here. There's really genuinely something wrong with my internet, or it's maybe the cable. Okay, so there is a trade CAD-JPY. Okay. Monthly buy stops were taken out. Okay. So the eye is gonna go into the internal range, of course. Okay. Oh shit. It's pissing me off, to be honest. Okay. So the monthly buy stops were taken out. Then there
This is
is
the
a
daily
dealing.
chart.
Yeah, this is daily chart. So this was like the monthly layout, the markup.
Okay, it got
Then price
taken
gets
out.
into like a premium fair value gap. Okay. So after price gets into fair value gap premium, you can expect a run lower than. So he waited for it to like get into the premium. After that, on the 1 hour chart, so now you know, so you go from like daily to H1, right? So on the daily chart, it gets into the fair value gap. Okay, this
Bro,
line
once
right
again,
here.
go to the first chart, the monthly chart. It just took out this high, right? So where it was, we have to go this fair value gap.
Yeah, it's
Okay.
gonna go right here.
Okay. In this chart,
Yeah, so
where
in
is
the
it?
daily
Where
chart,
is
there
it? Fair
is a
value
fair
gap?
value gap and the
This one
premium.
is
So
the fair value gap.
yeah, so
No. Fair value gap is down now.
it's lower from this. It's way lower from
Okay,
this,
okay.
but
Okay.
as an intraday trader, you can't really target monthly fair value gaps based on M5
Bias
indices.
is we are going down. That's
Yeah,
what he is
exactly.
trying to say.
So it's in
Okay.
like premium right here at the fair value gap. Okay. Then price taps that fair value gap right here. There's a breakup structure. There is a red on a short-term high. Now he anticipates that this market structure shift is gonna be held. Okay, so and have a look at this. There is weekly open. Remember that open high low close lesson that I taught. So price went up to manipulate, and he got into the manipulation, I guess. Yeah, so he got in the manipulation, sold it there. Most likely his stop loss was right there, and targeted these external
For these
ranges.
things, we don't need the kill zones to know, bro. We don't need
Mm,
the kill zones.
On H1, I guess you do need. Okay, H1 isn't that high, so your entry should be like in the kill zone, I guess. Okay.
Is he entered over there?
He entered at
This is
he entered in the
Canadian,
kill zone.
Japanese.
He entered in the kill zone. It's before the 12 p.m. So he was in the kill zone. Yeah.
Okay, bro. This one was a nice trade. Weekly open. This is accumulation, manipulation, and then it distributed.
Yeah. Open, high,
Okay.
low,
Open
and
high.
close.
Okay. Open high.
Low,
Then it's
close.
going for low. He
Yeah.
targeted he entered in high. So
Exactly.
it went for distributed on the low.
Yeah.
Okay, bro. That's it. Uh, I will study this. Maybe next class we'll ask.
So I guess,
We'll discuss this chapter.
yeah, so I guess
Top-down analysis.
we'll have our
I have
next
seen
class
your
in next week.
first class, but it was top-down analysis was not there, I think, bro. In the first class, I think.
No,
Did you add it in this course?
I know I did.
Are you-
There was top-down analysis in every single one.
Okay.
Yeah, you will see that it will be the sixth stream in
Yeah, I
every
missed
single.
it.
So now, if we don't have any questions, we can end the stream. Let me know.
That's it, bro. Nah, nothing else.
All right.
What's
So,
your plan, bro, in trading in future?
my plan right now. So tomorrow is Thursday, right? So I expect consolidation because on Friday there is NFP. So we don't really expect anything good before the NFP. So it's most likely going to be consolidation. So not interested in tomorrow, and I'm not either going to trade on Friday. I have exams. I won't be able to trade. Okay. So but then after that at NFP, I expect lower prices. Okay, so that's my plan. I have
All these news things, bro. In ICT, you'll learn about how to trade about these news and all.
I will talk about this. Okay, I will talk about this and how I approach newses.
Okay. Because I saw the in MMX summer, I think also he explained about the some economic calendar or something.
Yeah. Economic calendar is important.
Okay. Okay, bro. That's it. Have a good
Right.
night.
So good night, everyone.
Okay.
Have a great day.
Okay. See.
You are welcome, brother.